pleasure to have you in this session interacting about GST at 8. We've done our 4th annual GST survey. It's a GST at 8 survey, learning from the past and defining the future. That's the theme. And in that theme, we have got with us Mr. Raj Menda and Mr. Nagendra Kumar. Mr. Menda is the chairman and co-founder of the RMZ group, as well as the chairman of the FICCI Real Estate Group. Thank you for coming over, and thank you, sir, for being here. Interestingly, in our survey, the second most popular response seems to be around supply chain credits being, the most benefited for businesses. Now, the sector that you come from is a little different from a plain vanilla buy-sell of products or services. So before we go into the nuts and bolts of GST, our audience would be delighted to hear your insight on how's the journey of indirect tax been for real estate, since you've seen sales tax to VAT, VAT to GST, and GST, there's been a pre-COVID GST for real estate and thereafter. So keen to hear your thoughts.
So thank you, Mahesh. I think to get started, I'll just break it up into two zones. One was the GST regime, where, like you correctly said, there were multiple taxes to be reviewed, and a lot of the, as for the real estate companies are concerned, were challenging it because it was the way it was being interpreted, whether it was land, because there was stamp duty events to it, and what was the service in the real meaning, and so on and so forth. Luckily now, over time, we have seen that at least GST has put a finality to it. But having said that, I would still feel, the GST needs to distinguish between, production done for use and production done for running as a business going forward. So if I look at it as any production that's done for business, where income can continuously be received by the government, I think on the GST side, from a leasing and the leasing tax, they should put that in a separate box and let it give the whole effect, so that it can be set off systematically over time.
Mr. Kumar, I think what Mr. Menda is talking about is that it should be like a consumption tax. Don't tax business supplies. Before we go into some of the nuances on the real estate sector, which has quite a few of them, what's your take on that comment and what the desired outcome should be from a real estate sector?
Thanks, Mahesh. I think one of the important discussion happening for a very long time is to integrate the realty sector into the GST. While I think some part of the transactions covering the real estate is already in the GST in terms of the construction services, I think there are areas of concern with regard to taxing some of those relating to the development rights. Now, we are aware that a GOM constituted by the GST Council way back in 2019 to reconstitute in 2024 with the clear terms of reference to address the issues relating to taxing of the development rights, and also looking into valuation and the abatement mechanism for the land, and also potential way forward for a composition scheme. We need to wait for the GOM findings before it translates into some sort of an action on the part of the recommendation of the GST Council that may ultimately result in some sort of an amendment or modification to the existing design and the law. We need to wait for it, but I think it is very important to note that I think commercial infra needs to be looked into very focusedly, because when we are talking about real estate, it's residential real estate. I think the law is fairly settled in terms of the development rights, but on commercial infra, I think the transfer of development rights still continues to pose some challenges. We need to address that.
Thank you, Mr. Kumar. Mr. Menda, I think Mr. Kumar highlighted what's in store, that the GOM looks to be looking at certain areas. What resonated well for me in terms of what you focus on and would have an interesting point of view for our audience is from the commercial infra point of view as well as development rights. Are they really pain points for you? Do you hope that the government addresses those pain points soon?
So first, on the development right, I personally feel that development rights is an accretion for what comes off the land. So, it's in the air rights as to what the land can be done. So I personally believe that putting GST on that is not in the correct frame of thought. So somewhere it has to be reconciled and realigned. But on like an overall basis, like we just discussed, on the commercial side, we still need the alignment to happen, because a lot of commercial office development specifically is being done for multinationals on either a build to suit or for a custom built for them, it's purpose built for them. And keeping in mind that these buildings last for at least 100-150 years, whereas GST is being taxed on the leasing that happens for them, the government actually can be looking forward to an income for about at least 100 years of these buildings going forward. So, our personal representation is to see that there is some form of a pass-through that can be given to the developers so that it doesn't hurt us upfront specifically.
Thank you. Mr. Kumar, I think from a development right standpoint, is there a disparity on how it's taxed from a residential perspective and commercial? And we'll cover an interesting aspect on seamless credit in a bit, but maybe first we get your view on the development right in specific.
I agree with Mr. Menda that I think the development rights, basically if it is construed as an input service going to provision of the worst contract service, I think the seamless credit should be one option. Residential real estate project is to give an exemption. Insofar as the commercial infra is concerned, since most of this commercial infra is given in the form of a lease other than by way of sale, I think probably the law needs a little more clarity. I think one should really look at taxing way forward in terms of the construction services, and rather than dealing with taxing an activity which is relating to a transfer in use of land.
Thank you, Mr. Kumar. Coming back to a more fundamental point that you made about seamless credits. The real estate sector has had some ambiguities around ITC credit restrictions, and the law has certain restrictions. Keeping all that aside, what would you see as a desired state from an input tax credit and seamless credit flow, Mr. Menda?
So it's like this, first of all, when it comes to we costing our projects, we are quite still unclear as to how GST gets calculated. As you know, most of us are catering to the GCCs which are coming into India in a big way, and India needs to be competitive to the other countries which are also tapping into the same, potential for all these companies coming in. In cities like Bangalore, where I'm from, is not keeping up to pace. At least we should be able to make our products competitive so that there's a long-lasting attraction for the GCCs to come. One of the places where we always find the stumbling block is to how do you account for GST, which we would prefer that if it can be set off like what I said a little earlier and seamlessly, so it doesn't come like a cost right up front, but can be collected over time.
You did talk about GCC. I think the Indian government and state governments as well are really pushing hard to invite that investment, and it's great for our country. But coming to you, Mr. Kumar, I think the main point is how can the government implement this desired state of seamless credits in the real estate sector? What would your thoughts be? Because we've seen our survey saying the government has not only been very receptive in hearing, but has also been acting on recommendations. So with that, over to you.
Yeah, Mahesh, I think our survey has also clearly called out the restrictions on credit is adversely affecting the working capital and also the cash flow for most of the taxpayers. I think we are looking at robust collection of revenue. In the last 8 years, I think the tax system has more or less stabilized. I think it's now time for us to do a revisit on the restricted and block credits, and particularly I'm talking about Section 17(5). I think it is hurting the real estate sector in a great way. The way forward, we'll have to look at exactly how it could be eased. While government is legitimately concerned about the revenue outgo in case the credit has to be allowed in toto, there could be ways worked out in a manner which is advantageous both to industry and the revenue. I think there is a need for revisiting the restriction on credits on the real estate sector.
All right. With that, I think hopefully the GOM will listen and act as they've done in many cases in the past. Thank you both for spending the time and looking forward to further discussions. Thank you.
Thank you.